Bellows and Bellas, welcome to Moxie Wits episode 10. In today's conversation, we are going to be addressing the elephant in the room. We're going to be talking about stocks. We're going to be talking about the market. We're going to be talking about commercial real estate, interest rates, bank failures. We're blowing up spots to bring you the facts. So buckle up because we're in for a ride. So without further delay, let's slide right in. As companies report earnings and news continues to come in, a couple of things stand out to me. Number one, growth in the overall economy is slowing, and inflation just won't quit. They can't get it together. GDP came in at 1.6 growth, and inflation came in at 3.7%. Bad combination. Number two, companies are spending a lot on AI chips. Case in point is Meta, which they had an outstanding quarter, but got crushed after reporting earnings because they're basically spending globs of money on AI and AI chips. What is bad for Meta is good for NVIDIA and Broadcom. Alphabet and Microsoft also crushed earnings. Microsoft beat estimates for every major line item and had 17% revenue growth and 20% earnings growth. Alphabet finally broke out numbers for YouTube, and they were amazing. Google Cloud grew at 28%. Google authorized a $70 billion buyback and initiated a small dividend. Look, I would have liked to see it at least $1 a share. I think it's like 40 cents a share. It's a tiny dividend. Earlier this week, President Biden signed the TikTok divest or ban measure into law. The law gives TikTok's Chinese parent company, ByteDance, basically 270 days to sell TikTok. Failure to do so would lead to significant consequences. TikTok would be prohibited from U.S. app stores and from internet hosting services that support it. TikTok has vowed to fight this in court, but if the court does not overturn the law, then ByteDance will probably sell its United States assets to an American company rather than letting them go to waste and make nothing out of them. If this is the case, then some potential suitors include Alphabet, Snap, and Meta. Meta will probably not be allowed to purchase just based on, antitrust grounds. Snap, with a market cap of $24 billion, may not have the funds to purchase it, especially if the government or company does not allow for an all-stock deal. But that leaves Google. Google has plenty of cash, and they don't have a social media app. Some would say that YouTube is a social media app, but TikTok is totally different from YouTube. It's that short form content. And although YouTube has shorts, people love their TikTok. And I don't think they're going to just let it go under like that. I'm pretty convinced that if the law is not overturned, then an American company is going to totally come in and scoop that up. If not Google, then, some private equity company. Google's foray into social media was Google Plus. I don't know if you guys remember Google Plus, but that shut down in 2019 after it failed to gain any traction. So, I could totally see Google buying TikTok and just keeping everything running. Just the advertising alone is worth so much money, and the data as well. I think that they're definitely not going to let that go. And then some people think like, well, if there is a void with TikTok, is Snap going to be a good opportunity? Is Snap going to make a comeback? And look, that did cross my mind. They're thinking, hey, there might be some market share there, right? Since TikTok might cease to exist, but I just don't think that that's going to happen. Like I said, I believe that they are going to get bought out. Snap Inc. announces first quarter 2024 financial results. So first quarter revenue increased 21% year over year. Daily active users increased 10% year over year to 422 million. So compared to 989 million the prior year, an increase of 21% year over year. Net loss was 305 million compared to 329 million in the prior year. Adjusted EBITDA was 46 million compared to 1 million in the prior year. Operating cash flow was 88 million compared to 151 million in the prior year. Free cash flow was 38 million compared to 103 million in the prior year. I see Snap as an opportunity there, which is pretty wild to me. And who uses Snapchat? Do people even still use Snapchat? People still use Snapchat. It is what it is. One stock that I really like is Kava. So Kava was up, and I've actually been buying Kava. I actually initiated a position at $63 a share. It went down. Basically, my cost basis is 60 because I bought more, when it was at $59 a share. So that's exactly what I've been doing with Intel as well. And that's how you lower your cost basis. Hold on one second.
A few moments later.
We're going to address the elephant in the room. All right. Another bank just went under. Another US bank just collapsed. I literally just had to change my Band-Aid for that. Jerome Powell is trying to blame the bank failures on commercial real estate when in reality, it's deeper than that. J. Powell wants to get inflation down to 2%, but if the interest rates don't go down, we are going to be forced into a major recession. Let me explain this real quick to you guys. There is opportunity. There is somebody getting rich. The FDIC seized a regional bank by the name of Republic First, based out of Philadelphia. And the FDIC pretty much forced Republic First into a shotgun marriage with Fulton Bank. Republic First, not to be confused with First Republic Bank, which is another bank that collapsed last year. The FDIC estimated that the cost of this particular bank collapse to the FDIC's fund will be $667 million. The commercial real estate crisis has actually recently become even worse. So commercial real estate foreclosures jumped 117% in March as trouble looms. Commercial foreclosures increased 6% from last month and 117% from last year. What more people should be talking about is the fact that almost 1.5 trillion of U.S. commercial real estate debt comes due for repayment before the end of 2025. 20% of commercial and multifamily mortgage balances mature in 2024, so this year. Historically, commercial real estate is affected and crashes before housing does. I don't see how there's going to be a soft landing. I personally don't. people are saying commercial real estate, commercial real estate. Oh my God, that's the elephant in the room. And yeah, it is. But the interest rates are a huge problem. The bank that went under, it was not because of commercial real estate. Neither was First Republic. With that being said, some things aren't making sense. For instance, Blackstone, despite them losing, oh my God, hundreds of millions of dollars in revenue, their stock has managed to go up. Look at that. And I get it. Like Blackstone isn't going anywhere. Like Blackstone does more than real estate. Blackstone is the world's largest private equity firm. And this came out last week. First quarter distributable earnings rose 1% year on year, supported by growth in fee-related earnings that was partly offset by a decline in income from asset divestments. Blackstone's net profit from asset sales fell 25% to $293.3 million as it cashed out fewer assets across its private equity and credit portfolios. During the quarter, Blackstone's opportunistic real estate funds were flat at 0.3%. Corporate private equity funds appreciated by 3.4%, liquid credit funds gained 2.5%, and its hedge funds added 4.6%. By contrast, the benchmark S&P 500 rose 10.2% over the same period. So this is what's so messed up. Like Blackstone making $10 billion multifamily purchase, so they're buying stuff, but then they're just giving away keys, giving stuff back to the bank, completely writing things off. Blackstone completely writes off Playa District office campus. Deutsche Bank holds $483 million loans in former Howard Hughes Center near Lax. Blackstone defaulted NYC office tower loan up for sale at a 50% discount. Blackstone's real estate shopping spree is now a mortgage default crisis. And this was from last year. And then look, they're defaulting left and right, but then they're buying up more properties. Okay. Anyway, this commercial real estate crisis is getting out of control. Like you're seeing 50% off, 80% off, literally even 90% off. Hopefully we can at least get a piece of that pie, right? But the problem is becoming a lot deeper. According to the Financial Times, the amount of bad property debt is higher at big banks than their existing reserves against it. So, quote, the average reserves at JP Morgan Chase, Bank of America, Wells Fargo, Citigroup, Goldman Sachs, and Morgan Stanley have fallen from $1.60 to 90 cents for every dollar of commercial real estate debt on which a borrower is at least 30 days late, according to filings to the Federal Deposit Insurance Corporation, end quote. There are the largest U.S. banks with the most commercial real estate exposure. JP Morgan is number one, 171 billion. But the share of total loans, that's 12.6%. Their total assets are 3.9 trillion. The banks with higher percentages of commercial real estate, Wells Fargo, 21.2%, Capital One, 15.6%, Citizens Bank, 23.1%, M&T Bank Corporation, 40.1%, Huntington Bank Shares, 33.2%, Zions, 29.3%, New York Community Bank Corp, 57%, U.S. Bank Corp, 14.9%, PNC, 15.5%, Truist, 13.3%, Capital One 15.6%, First Citizens Bank, their proportion of CRE loans is 14.9%. What's going to happen is they're going to try to renegotiate, right? Developers and landlords with the lender, right, with the bank. They're not going to be able to refinance at a favorable interest rate because JPOW won't lower those damn interest rates. There are foreclosures happening with people's homes, and it's going to get a lot worse. There is a housing shortage, but remember, real estate is very regional. You have your markets and you have your submarkets, and everywhere is different. There are areas where, you're seeing an influx of new homes that are just sucking wind. During times of uncertainty, during times of distress, it's important to keep a level head. Always see an opportunity when there's blood in the water. I don't want to sound like a savage, but that is just the way it works. Millionaires are made in markets like this, and there is opportunity out there. When the opportunity presents itself, you'll be ready to pull the trigger. Like, share, subscribe. Please stay tuned. I am going to be releasing another video in the next few days. So thank you so much. I will talk soon.